What is going on, everybody? Welcome back to the Daily Stack Report, guys. Today we had a big drop, but this is why I'm still bullish, guys. Stay tuned. But first, if you're not subscribed, hit that subscribe button, hit the like button, because at 100 subscribers, I'm giving away this beautiful 1996 American Silver Eagle. But without further ado, let's get into the meat and bones. Why prices dropped so hard today? Strong U.S. labor data, rates stay higher longer. The main fundamental trigger. Reuters tied today's drop to a stronger than expected U.S. labor data after silver dropped 8.9% to around 76.54 ounces. As you can see, we bounced off this line of support right here around $74. And hey guys, guess what? We filled the gap. So if you've been watching these videos and you've been staying tuned to everything I've said, we have to fill this gap. So it's not necessarily a bad thing that we filled the gap today. So don't get too discouraged whenever you see that big drop. It was bound to happen. And as we've experienced time after time, when it comes to silver, these big drops are just part of the game. If you can't handle it, if you can't take the heat, get out the kitchen. That's all I gotta say about that one, guys. The dollar strengthened today. Reuters also said the dollar rose, which is a classic headwind. Gold and silver are priced in dollars, so a stronger dollar tends to put pressure on them. And Forbes described the move as a largely flow-driven, meaning forced selling and positioning, not a sudden change in the long-term story. So, guys, this wasn't just investors changing their mind about precious metals. It looked like liquidation. When money gets forced out, fundamentals don't matter for a few hours. And that's exactly what we saw whenever we saw this big drop all the way from around that $83 mark, $82.50. As you can see, this pennant right here, we did break to the downside of it. We're coming out right here. We didn't fully finish it. We broke down, and then we tested this trend line here. And we tried to break above it again, but just was not strong enough push. And we had that dramatic drop, but we bounced off this. Remember, whenever we bounce off these trend lines on the upside or downside, it typically creates a dramatic move in the opposite side. So bouncing off the bottom means that we hit a good, nice little push from that 74 to 76.99. Let's see if we hit 77. Boom, 77. Call it 77. The $5,000 gold is what we broke today. Reuters explicitly pointed to stop sell orders triggering after gold broke below 5,000. It's technical, a line in the sand. When it breaks, algorithm and risk systems sell automatically, and that pushes prices lower, which triggers more stops. So I wasn't too surprised about that whenever I saw that. Silver is thinner and more leveraged than gold. It moves more violently. Silver was down almost 9%, while gold was down under 3%. Classic silver behavior in the deleveraging event. And the Shanghai metals market described how repeated margin and cooling actions can create a liquidity squeeze that punishes leverage positions, worsening volatility. Silver is the metal that overreacts both up and down. In a liquidation event, silver gets hit even harder. So guys, here's what I'm looking for going forward. The CPI catalyst. Reuters noted the market is now focused on upcoming U.S. CPI because of a softer inflation print can revive rate cut expectations and support metals. I want to see if the government shuts down again, because if it does shut down, that could be a big trigger for the upside for precious metals. So I'm checking that too, and I'm seeing if gold can recapture 5,000. I want to see how fast it can go back up to 5,000, or if it's going to start treating 5,000 like a trend line, getting rejected there and coming back down. So that's going to be interesting to see. And also, I want to see silver's bounce zone. Today, silver dropped into the mid to high 70s, is where buyers often step in. But the key is whether we see follow-through buying or dead cat bounce. So guys, this is kind of the trend line I'm looking for here. This $74 now that we hit off of it. We filled this gap right here at $78, which was positive news in my eyes. But now the test is going to be, if we break this $74, can we stay above it? Or are we going to break below it? If we break below it, guys, it's 70, and below that, guys, it's all the way down to like $52. So let's not go that far yet. We're going to hope we keep this $74 line, and this can be another trend back on the upside here. Even when spot dumps, don't worry, physical often doesn't feel the same because premiums widen, dealers protect replacement costs, inventory tightens during panic. So this goes back to the other video I made the other day about silver eagles versus generics versus your 90% silver, guys. Call around your shops. See, before you ask what they're selling it for, ask what they're buying it for. All right, whenever you have to, in the case of a liquidation event and you personally have to sell it, ask them what they're selling it or what they're buying it back from you for. And 90% silver has the widest margin of error right there. I mean, you may get it for at spot or right below spot, but whenever you go to sell it back, shops right now are buying it back around 30 to 40% of spot. So if spot is $70, they're only paying you about $40 to $45, around $45 per dollar face value, which equates to around $30 an ounce, guys. So that's not, or $30 per $1 face value. So that's not a good margin. Whereas silver eagles, yes, you do pay that premium up front for that silver eagle. Typically, unless you call around and find the right shop, you're going to be around $8 to $16 above spot. But when you go to sell that silver eagle, typically shops are buying it at spot or maybe $2 or $3 below spot. So that does help you when it comes to selling in the case that you have to sell. Keep that in mind whenever you're buying, guys. But today was a classic macro technical cascade. Strong labor data, rates higher for longer, dollar strength, gold broke 5,000, stops a trigger, silver got punished hard because it's more volatile. And hey guys, if you want consistent updates, make sure you hit that subscribe button, make sure you hit that like button. I'm giving away that 1996 eagle, but as always, stay safe, stack smart, and I will see you guys tomorrow.